Good afternoon, guys. I want to do a video on why real estate is the best investment that you can make. So we can go over this real quick. Just some rough numbers just for fun, just to show you. So let's say you got a $150,000 house. You want to get a mortgage on it. Put a $30,000 down payment. Here's your mortgage payment for 30 years at 4%. That includes principal, interest, and taxes. You can rent it for, let's say, $1,400 a month. I went high on the expenses here at $600 a month, really high. That leaves you with net cash flow of $28 a month. I'm going to say that's really low. We're being super conservative. What that gives you, if you factor in 2.5% a year appreciation, $2,000 principal pay down a year average, you're looking at like that number right there, $6,000 a year. It's a 20% return on your down payment, that $30,000 that you did. That's a 20% return, tax free. You can even sell it, skip the taxes on that by doing a 1031 exchange. So that right there, the first example with a mortgage, to show you why real estate is worth it. This could be higher potentially. This is going to be about the same, but over the years, this will go up right here. Your rent will go up. This will stay the same. So your net and hopefully your expenses will drop. Your cash flow will go up. So you're looking at potentially putting a 20+ return on an investment property when you get a mortgage. Now, I did some more numbers, and here's what you could do if you had $100 cash flow. You're looking at almost $7,000 a year. That turns it into 24% return on your $30,000 invested. That's a really good return. Here's a little mock-up. If you go buy a fixer-upper, buy it for $60,000, put $30,000 in it, you got $90,000 in your total investment. You rent it for $1,000 a month. We're going to go high expenses again just to be conservative. You net $400 a month. You're going to get like a dividend of about 5%. You got that yearly appreciation. You don't have a mortgage, you don't have any debt to pay down, but here's your cash on cash return, 8%. Not too good. I mean, it's okay. Appreciation could go up, your rent could go up, that spread could be better year over year, but paying cash for a property like that it's okay. I mean, rather put it in the stock market. But you can go refi that at a bank, $120,000 value. They'll give you a mortgage on it. You'll have no money in the deal. Even if you had high expenses and you lost on your cash flow, which is not likely, you'll usually cash flow. But even at that point, if you lost that much per year with the appreciation and the debt pay down, you'll be making over $2,000 a year with no money in the deal. So more than likely your expenses will be lower, your rent will be higher, and you won't have to actually lose on your net cash flow. But this is just a good example of how real estate can be really healthy returns. Yeah, you may have to do a little extra work on, or you can pay a property management company, but you go put a $30,000 down payment on a house and you can make a 24% return. That's worth it in my book. And you have a real asset, a real house, So let me know what y'all guys think. If y'all got different numbers, if y'all got better numbers, how my numbers work out. But thanks for watching. Hey, one other thing I did want to mention is, as you look at these numbers, take a screenshot, jot those down, see what it looks like. But one thing I wanted to mention was, if you start doing your real estate like this with rental properties and you have your own business and you manage your own properties, you can use and get more tax benefits from it, because what you can do is have a home office. You can write off expenses from your house that you normally have, your property taxes, your electric bill, things like that, your computers and blah blah blah. You can write that off for your real estate business, in addition to all the other tax advantages of real estate. You have your own LLC, you have business expenses, you have cars that you use. So this is another real advantage to real estate, whereas you can't do that with stocks.